of today's presentation is to explain why credit unions are more beneficial than banks. Although there are many similarities, the differences are significant. Let me begin by asking you, where do you currently have your money? And as the saying goes, are you getting all the bang for your buck? Let's begin by defining what a credit union is. A credit union is a cooperative financial institution that is owned by its members. Each member has a share account which entitles them their ownership. The board of directors are chosen by the credit union members in a democratic one-member, one-vote way. The board of directors are not paid for their work. It's strictly volunteered. The credit unions are not for profit. Credit unions truly believe in helping people. The credit unions have an insurance called NCUA, which stands for National Credit Union Administration. What this is a federal agency that insures the members' deposits up to $100,000, and it also supervises the credit unions. Now that we've seen what a credit union is, let's see what a bank is. A bank is an organization, usually a corporation, for profit. The board of directors are those customers that usually hold the largest balances or largest deposits, which entitles them more ownership and more votes. Unlike credit unions, the board of directors are paid for their work. Like the credit unions, the banks also have an insurance, which is called FDIC, known as Federal Deposit Insurance Corporation. What this is a United States government agency that also insures the customers and supervises the banks. Now that we've seen what a credit union is and what a bank is, let's see what each has to offer in deposit rates and loan rates, beginning with the loan rates. On a new car loan up to 66 months, First Light Credit Union offers an interest rate of 5.95%, GCU 5.55%, Wells Fargo 6.60%, Compass, formerly known as State National Bank, 9.99%, Chase Bank 5.74%. If you see the difference between GCU and Compass, it is a difference of 4.44%. It's a pretty big difference. Now let's look at a mortgage loan with a 30-year term with fixed rates, beginning with El Paso Employees Credit Union. It offers an interest rate of 5.75%, GCU 5.87%, Wells Fargo 6.12%, Compass Bank 5.88%, Chase Bank 6.00%. Once again, you see here the credit unions offer the least amount compared to the banks. Now on a signature loan up to 48 months, First Light Credit Union offers an interest rate of 9.15%, GCU 9.99%, Wells Fargo 13.25%, Citibank 10.55%, Chase Bank 10.74%. If you notice here, the banks are at its double digits. Now on credit union business loans, the interest rates are slightly lower. The rates are based on the borrower's and/or guarantor's financial strength. Also, the rate is based on the collateral that is being used to secure the loan. Notice here the significant difference between a credit union and a bank is that a credit union is prohibited from charging a prepayment penalty fee. Now that we've seen the differences on loan rates, let's take a look at deposit rates. Beginning with a savings account with an average daily balance of $100, First Light Credit Union offers an interest rate of 1.00%, GCU pays 1.00%, Wells Fargo 0.10%, Compass Bank 0.10%, and Chase Bank 0.15%. Notice here the credit unions pay out more than the banks do. Now let's look at a checking account with an average daily balance of $1,000. First Light Credit Union pays 0.15%, GCU 0.75%, Wells Fargo, Compass, and Chase don't pay anything at all. I don't know about you, but something is better than nothing. Now on interest rates on a CD. And what a CD is, also known as certificate of deposit, it's like a savings account that is opened up with the required amount from each financial institution for a certain amount of time. For example, 3 months, 6 months, or 12 months. Within that time frame, you are not allowed to withdraw the money. If not, you'll be charged a penalty fee. The advantage of the CD is that it pays out more than a savings account. Let's begin by looking at First Light Credit Union. It pays an interest rate of 3.75%, GCU 4.10%, Wells Fargo 1.15%, Compass 2.61%, and Chase Bank 2.00%. Notice here the credit unions pay out more than the banks. Another difference, First Light Credit Union requires an amount of $500 to open a CD, GECU only $50, Wells Fargo $2,500, Compass $5,000, and Chase Bank $1,000. Also notice the banks require more than the credit unions do. And finally, we all hate them, but we've all paid them. ATM fees. Keep in mind, these are the fees that are charged when using an ATM at a non-financial institution. Beginning with First Light Credit Union, it charges up to $1. GCU also charges $1. Bank of America charges $3. Chase Bank also charges $3. Once again, the credit unions do not charge as much as the banks do. Now that we've seen what a credit union is, and what a bank is, and what each has to offer, perhaps you want to reconsider where you currently have your money?